Hey, it's Mike Hambright from FlipNerd.com. Welcome back for another exciting expert interview where I interview successful real estate investing experts and entrepreneurs in our industry to help you learn and grow. If you haven't checked out the new FlipNerd.com yet, please do. We've got hundreds of properties listed on the site, hundreds of vendors listed on the site, and it's really shaping up nicely. I think you're going to love it. So go check out FlipNerd.com. Today I'm joined by Rick Sharga, who's the Executive Vice President at Auction.com, the country's largest online real estate marketplace. Rick is a 30-year veteran of technology marketing and real estate and a frequent guest on all major news networks. But today he's here with the best of all of them, FlipNerd.com. So Rick has briefed the federal government, the Federal Reserve, large banks like Citibank, JP Morgan Chase, Deutsche Bank, and many more. And today we're going to discuss the outlook for rental properties and where the real estate market is headed overall. This is a topic that Rick talks about frequently with major news networks, and today he's going to share it with us. Before we get started, though, let's take a moment to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days with rates starting as low as 9%. For more information, call 888-296-1697. B2R Finance makes loans tailored specifically for rental investors. They can help you unlock equity from existing properties so you can get cash to grow your rental portfolio. That's huge, and it opens up lots of opportunities previously not available to rental investors. Need a loan? Call 855-819-4412 or visit b2rfinance.com today. National Real Estate Insurance Group is the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. We'd also like to thank Crestar Funding, Mid-Atlantic IRA, and Renters Warehouse. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Hey, Rick, welcome back to the show.
Nice to be back. Things have changed quite a bit since we last talked.
For both of us, I'm sure, yeah. So for those that don't know, Rick has been on the show before. This is going to be episode number 216, and the first time Rick joined us, I was brand new. We were episode number 4, and so 212 episodes ago. I'm sure we've both improved with time, my friend.
Well, it's good to know that I knew you before you were rich and famous. So.
Yeah, something like that. I think I might be more broke today than I was, but hopefully that's not going to be true. But glad to have you back, and I know you really have your ear to the ground as much as anybody in the real estate investing space, and because you've done so much with REOs and trustee sales and large banks, you really probably at the forefront of being able to predict of what's going on. So it's exciting to kind of talk about these things today.
I'm glad to be here and do what I can.
Yeah. Well, Rick, but just take a couple minutes to tell us more about your background and maybe even a little bit about your role with Auction.com.
Well, thanks. I'm Executive Vice President here. I actually have a pretty interesting job in that I get to go out and do exactly what you and I are doing today on a broader scale. I work with our Auction.com research team out of New York, who puts out a copious amount of materials on both the commercial and residential markets. And I'm out talking about housing trends on a regular basis. So I get to talk to the press, I get to talk to regulatory agencies, government agencies, and really represent Auction.com across the spectrum of the entire real estate industry, whether it's talking to real estate investors, real estate professionals, agents and brokers, lenders, or as I mentioned, the press and government agencies. So part of the reason that I do keep my ear to the ground and my finger on the pulse and whatever other cliches we'd like to throw out there when it comes to real estate is because that's my job. I did it for a couple of years at a company called Carrington Mortgage Holdings before I got here. Carrington owns and operates about 16 different businesses that are in the real estate and mortgage industries. And before that, I was at Realty Track for about 10 years, where we published the country's largest database of foreclosure information. And that's really where I cut my teeth in the real estate industry. Came to Auction.com as you and I have talked about, because I believe it's inevitable that within the next 10 years, the overwhelming majority of real estate transactions are going to be done online. May not be done by
Sure.
auction, but they're going to be done online because the next generation of home buyers and sellers will demand it. And auction.com, in my perspective, or from my perspective, had a huge head start compared to anybody else in the industry. We sold over 50,000 properties last year, about 1,000 commercial, and the rest of them single-family residential units.
Right.
And since the company was formed in late 2007, we sold $30 billion in assets. So,
Wow.
you know,
That's awesome.
we're kind of getting the model down and ready to go in the market
Yeah.
for us.
Well, just like everything in life, that there's very little that I buy without doing some research online. I mean, other than impulse type buys where you're at a store and yeah, I'll take that. But quite frankly, even sometimes I did this the other day. I was at REI. We're about to go on a trip to the Canadian Rockies and needed to get a raincoat, and they didn't have my size. And I'm like, well, just pull it up on Amazon.com, and of course they had it, and it was like $40 cheaper. I'm like, just order it with a couple clicks of a button. So, it's inevitable that would go into housing. I mean, I think that probably it's a much more common phenomenon today where people are finding the houses that they want to look at this weekend and telling their realtor, if they're represented, these are the ones I want to look at, versus in the past, realtors would say, well, here's all the stuff that's available, and people can kind of self-serve more now today than ever.
Well, and I think ultimately it will be a hybrid model, Mike.
Yeah.
I don't think I'd move my family cross country or even cross town without being able to look at the neighborhood and kind of get a feel for the property.
Right.
But there's no reason that the transaction itself can't be executed online.
Sure.
And we've been referred to by some people in the press as the eBay of real estate, and that's probably not a bad analogy.
Yeah.
But I do think, and you and I were talking about this before the show, I think the ultimate model is probably one that's determined by the consumer. It's sort of like the financial services industry. If you work with Charles Schwab, you can do self-serve. You can buy all your own stocks, do your own financial planning with all their tools.
Yeah.
Or you can get some help from them and pay for fee-for-service basis. Or you can go full brokerage and they'll do all the work for you, make all the recommendations, all the choices.
Sure.
You pay them their fees. And I wouldn't be at all surprised to see real estate ultimately have the same sort of online model.
Sure. And of course, most of your history is working more with investors that are more often than not represented by an agent, or they're an agent themselves facilitating their business, and they're able to, maybe they're cash buyers, or they're just able to move a lot quicker. And maybe talk about how let's talk about how that's evolved, because I know we're going to talk about, you and I were talking about this before the show, that so myself, I started 7 years ago. I was classically kind of trained to buy deep and never even think about paying close to retail value. But then there's this subset of people that are buying rental properties, and they're willing to pay a lot more for them because financing is cheap again, and they might be able to get long-term fixed mortgages, and they just have a very different model for evaluating a deal versus somebody that's going to fix it and flip it and resell it or even wholesale it right away, because they may have a 10, 20, 30 year or more horizon to where they don't care what the value is today. They just care about cash flow or what their next best investment alternative may be, which, a lot of people are kind of getting dismayed with the general stock market and more interested in real estate than ever right now. So maybe kind of talk to us about where things are going in this kind of rising of the rental investor, that, the type of person that maybe wasn't there just a few years ago.
It sounds almost like a horror movie, doesn't it? The rise.
Yeah. We're going to have to get like a big drum beat, like we're kind of doing an intro for the rising of the rental investor.
The press is always the last to know, it seems. So there was a lot of buzz about the institutional investors coming into the single family rental market
Sure.
a few years ago. And I was at Carrington at the time, and we were one of the early movers in that market, and got out quickly because the prices went through the roof. It got to where if you didn't have your own capital and you were raising capital, the prices of the properties blew up the models. And those early models were based on a 3 to 5 year hold. It was part of your return on investment was going to come from the rental itself, although not much. A big part of it was going to come from home price appreciation. And the prices rose much more quickly than anybody guessed because the investors jumped in much more rapidly than anybody had guessed. So yeah. What's interesting to me, though, is that when the institutional guys got involved, there were already somewhere in the neighborhood of 12 million single-family units being rented, single-family homes. Now that they've done what they're probably going to do, that number is up to maybe 13 to 14 million. But the increase hasn't been nearly as huge as what you would have expected based on all the ink it's gotten.
Right.
What we're seeing now is the institutional guys are backing out. They're not exiting the market entirely, but they're buying less volume.
Right.
They're being replaced by both individual investors and a new category that I sort of dubbed the super regionals. So these are companies that are professional businesses. They have business processes in place that look very much like the institutional guys, but they don't have nearly the scale or the volume of a Blackstone or a Colony or an American Homes for Rent.
Right.
So it's somewhere in between mom and pop and Blackstone. And that category is set up where people are buying 300 to 3,000 properties in a region and managing them as an ongoing business.
Yeah.
All of this, and the same thing with your members, who are, I guess, primarily individual investors, is being driven because home ownership rates continue to plummet. We're at a 20-year low in terms of home ownership rates across the country. Part of this is math. We're starting to see household formation bubble up after being flat or negative for a few years. Junior's finally moving out of mom's basement. I guess she gave him the Xbox and said, "You're out, go on."
Yeah.
But a higher percentage of those new households are rental households. And the availability of rental units across the country is hugely constrained.
Right.
Rental units are occupied 97% across the country, and that's an all-time record. So rent prices continue to go up. There's not enough availability to meet demand, and so investors are voting rather largely to move into that category and take advantage of what I believe is probably at least another 3 to 5 years in this cycle before it recorrects and we start to see a real increase in home ownership rates again.
So you think that's what'll happen, is it'll be 3 to 5 years down the road before people will start to redefine the American dream again? I think maybe you could give some perspective on this. My guess is that there was this movement over the last several years where people have been told for a long time the American dream is home ownership, instead of the American dream being maybe some level of less debt and financial freedom. So it's okay to rent. It's okay to be a renter and not have to necessarily own it. Because there's some pros and cons, but I think
I'm still a little bit old school in that for the average American, the surest way to financial security in the long run is still to own a home.
Yeah.
Because it's sort of forced savings and maybe your return as a strict investment isn't great. But I know that if I sold my home today after having owned it for the past 15 years, I'm going to walk away with a check. Whereas if I had rented for those 15 years, I'd be walking away with nothing. So
sure.
From a generational standpoint, it's still a good.
As long as you didn't continually refinance your house every couple of years and pull your equity out.
We did a different show on financial irresponsibility.
Right.
But I think we're in a really unusual time period right now, and everybody blames the millennials. I'm going to give them a little bit of a pass here. Generation X, the one that preceded the millennials, had the highest home ownership rates of any generation at the peak of the last housing boom and bust cycle. They also got clobbered when the market turned. And so the home ownership rates right now, if you're looking at that, the high end of that 25 to 35 or 35 to 40-year-old demographic, their home ownership rates were decimated. And I'm wondering if a lot of those people will ever come back into home ownership.
Yeah.
What that means is the next generation, the next wave of homeowners, the millennials, has to take up that slack. And ultimately, I believe they will. They're a larger population base than the boomers. So they could potentially be the largest group of homeowners in U.S. history. But they're taking longer to get into the market. They're staying in school longer because jobs aren't great. They're getting their first real job later because the market for employment isn't great. They're getting married later. They're having kids later. So all of the trigger points that would move them to home ownership are happening later.
Okay.
So I do believe ultimately we will see them enter the market at similar percentages to what we've seen previous generations do. But I believe there's going to be probably another 3 to 5 years where the numbers just aren't as strong as what most economists would have forecast.
Yeah. So Rick, kind of summarize that into what that means for property owners, rental property owners.
I think you're looking at another 3+ years of rent rates continuing to go up on an annual basis, of there being a huge market of potential renters, of families who prefer single family dwellings to apartments,
Yeah.
but would prefer to rent the dwelling rather than take the risks in their mind, or get into that long-term financial commitment that home ownership requires.
Hmm.
So I think this is an unusual period in home ownership history in the U.S., if you will. I don't think it's going to continue to be as skewed toward rental long term as it is today,
Yeah.
and will be over the next couple of years. But I do think we're going to plateau at a higher level than we were when we entered this. So in other words, if we started with 12 million single family homes being rented, we may plateau at a rate of 16 million or 17 million. It won't go up indefinitely, but it won't go back to 12.
Sure.
So
Sure.
lots of opportunities. I should point out though, because the title of your business is Flip Nerd, that and not Rent Nerd. That
But
it's
there's some misconceptions about that too. I will say that we embrace all real estate investing, so it's not just flipping houses. But
it was mostly a joke, Mike.
I have to clarify that. I actually have to clarify that. Oh no,
I got it.
we keep rental properties. It's like, well, yeah, I do too. So go
So
ahead. Sorry.
we are seeing, we survey, most of the people who buy on auction.com are investors, and a huge number of them are individual investors. So we survey them every month to find out what their intention is with the properties they're bidding on. Are they going to flip? Are they going to hold? We're finding a couple interesting things. One is that the people that are buying at live events, offline foreclosure auctions at the courthouse steps, sheriff sales, those folks are much more inclined to flip than they are to rent, almost universally. We had a little bit of an aberration in Texas last month. I think that might be because of the oil price issues and a little bit of a change in investor psychology. The other and the online people, the people primarily buying bank-owned properties, are much more inclined to hold than they are to flip. There are some regional variances, though, that I think are important for your members. States like California, Washington, Arizona to a certain extent, where you have high property values and very, very low inventory of existing homes for sale,
Right.
still skew very heavily toward flipping.
Okay.
So we're talking to investors who are basically telling us the property prices are too high to rent out at a profit. But there's so little available existing home inventory that if they can buy something just a little bit below market value, they can probably overprice it and still sell it once they've repaired
Right.
it, brought it back to market. So
Yeah.
you have to know your local market. This isn't just a renter's market across the country.
Sure, sure. So, what are your thoughts on, we talk, I know you have your ear to the ground a lot with institutional investors, and I know that you know all those guys. But I think there's this phenomenon that's happened, and maybe you have stats behind it to match my gut feel and some of what I've heard of, just the mom and pop type person that just doesn't like the stock market anymore, doesn't trust it anymore. And it's become easier than ever to buy rental properties. I think there's just more trustworthy property management these days. Technology allows you to kind of invest somewhere without physically being there, which was hard in the past. You just had to trust somebody. And it's a little bit different now where it's made kind of all the stars are aligned that have made property ownership, rental property ownership, easier for, mom and pop type shops than ever before. And of course, with interest rates as low as they are, it doesn't, you could essentially buy, in a lot of markets, you could buy houses at full retail value and they still might cash flow nicely and you're building equity over time. And so talk about kind of that phenomenon of the smaller person that is able to, accumulate rental properties easier than ever before.
Well, it's funny. I was on a panel locally not too long ago, and the moderator was Bruce Norris. I think you probably know who Bruce is.
Yep.
And besides being a real estate investor, he's also a hard money lender.
Right.
And he was telling me that he just had a meeting with somebody where he was talking about hard money interest rates of below 10%. And I didn't think I would live long enough to see hard money loans for, that didn't have double digits on the left side of the decimal point. So if hard money loans are that cheap, imagine what traditional financing is once you have a rented property. And
Right.
You're right. We've seen a movement because of the market opportunity, because of the availability of capital. It's very affordable, of more and more individual investors moving into this rental space.
Right.
And given current market trends, that makes an awful lot of sense. Technology is important. The availability of technology is certainly a factor. I really do believe, to a certain extent, it's also part of the reason we're seeing this is because of the growth of professional property managers as kind of a class of service providers.
Right.
I know Carrington is one of the biggest corporate entities in the market. They probably manage, I have to guess, somewhere between 5 and 10,000 properties every month on behalf of bigger investors.
Okay.
We have a group of individual investors we call our VIP members here at auction.com. And I know one of them, for example, lives in California. All of his rental properties are in Oregon and Michigan. And he's basically built his own networks of service providers in those areas.
Right.
But those are markets he likes and understands, and they're much more affordable than what he would be able to buy locally.
Right.
He's an individual investor. So, I mean, that's kind of more the model that you're seeing as we go into the market today.
Yeah, and a lot of, there's kind of this rise of the franchise property management companies that they can kind of roll up your reporting just like a financial services company would, to where it doesn't matter where, as long as they have a presence there. You could have properties in Chicago and Indianapolis.
I'd urge a little bit of caution about the franchise guys because the quality of the service is going to be entirely dependent on that franchisor or franchisee, I think.
Sure.
And you hear about spectacular service in one market and awful service in the market right next to it because of the individual who's running that business.
Sure.
So you want to check your local references on those.
Yeah. But that aside, it's you're not, it's kind of you start to you can see how things are kind of moving along to where people start to become agnostic as to where their rental properties are.
Correct. It's much less important. And financing, your other point, one of the interesting things I've watched, and I'm fascinated with these hedge funds. They're just brilliant at making money. So, Blackstone entered the market buying these properties at below market values, is now making money on the rents. Ultimately, will make money selling the properties. And oh, by the way, they're one of 3 or 4 huge financial institutions who've now introduced financing for individual investors who want to
B2R, in fact, they're one of our show sponsors here, B2R.
And it's a great product, but these guys are it's a brilliant model. Now they're going to make money, on the rents when they sell, and if they sell to somebody who does the financing through them, they make money on the financing too. But there's a lot of short-term financing that's available at very competitive rates from companies like Blackstone, like Colony, like Cerberus, who that's oriented exactly at the kind of buyer we're talking about right now.
Right. So, Rick, if you had to kind of sum up in a couple of minutes, so where you think the opportunities are for rental property investors, buy and hold real estate investors, what do you see happening over the few years to come?
You mean regionally?
I guess everything comes down local to the local market ultimately. But where are the pitfalls, and where do you think some of the better areas are?
So again, I think what you just said is really critical. It does come down to your local market and the expertise you have at the local market. The other pitfall, there are really 3 pitfalls I see individual investors make in this area. One is they overvalue the property. Now, if you're buying a property to rent, that can be less life-threatening than if you're buying it to flip. Because if your margins are a little bit off, you can probably make them up over time, or at least offset some of the damage over time. The second is that people are woefully bad at estimating what the cost of repair might be on a property and getting it ready for market. Slapping on a fresh coat of paint and putting in some cheap carpeting often isn't going to do the job if you're trying to get a family to rent the property out. So, make sure you get that number right. And then the third is the thing we've just been talking about. It's much more difficult to manage these properties than people really anticipate. You have to know who's going to answer the phone at 3 o'clock in the morning when the hot water heater bursts, and where you're going to get that spare part, and what's your supply chain look like, and what kind of insurance do you have, and on and on and on. So those are kind of the pitfalls. The opportunity, I really believe, exists in just about every major market and a lot of secondary markets as well. We're seeing a lot of activity in the Southeast and the Midwest, where property values haven't escalated quite as rapidly. You can still buy properties affordably and walk away with a 10-point return on investment on an annualized basis.
Sure.
You're not getting your money like that in a lot of other investment choices today. So it's less critical that you really buy smartly, but the smarter you can buy, the better your long-term outlook is in terms of ROI as well. But that's also important to keep in mind. If you're buying in Indiana, you really need to be buying with a much longer-term hold strategy.
Sure, absolutely.
California or Nevada.
Right, right.
You need to know what your horizon is as an investor. That's what I always tell people on auction.com. If you're going to buy something, it's not a question of being successful buying the property. That's only step one. What are you going to do with the property after?
That's the easiest part when it's a rental.
It really is.
Yeah. Great. Well, Rick, I know that a lot of things have changed at auction.com in terms of how your model is changing to evolve more and more towards consumer base, but you still serve a lot of real estate investors. Maybe you could just take a minute and kind of plug auction.com for those that haven't used it that are real estate investors in terms of what's available to check out your platform.
I would hate to do that, Mike.
Yeah.
Need to do a sales pitch? No, seriously, thank you for the opportunity.
I will say I've actually sold a number of properties on auction.com in the past ourselves and had great success with that. So
I appreciate that.
Yeah.
We've been in business as auction.com since late 2007. We really started the online platform in 2008. And since then have sold over 165,000 properties. And the numbers continue to go up every year. I mentioned we sold 50,000 last year. We're on pace to do more than that this year. So at any point in time, there's between 15 and 20,000 properties available for sale on the website. We do auctions literally every day of the week except Sunday, and they're done regionally and they're done by types of property. So if you're in California, we're probably doing auctions on Tuesdays and Thursdays. If you're a commercial investor, we might be doing sales on Wednesday and Thursday.
Okay.
But that's all laid out on the website. It's free to subscribe. There's no cost for people that are interested in subscribing. You register for auctions on properties you're interested in, and at that point, it works pretty much just like eBay. We have a scheduled auction that will take place over 48 hours. You want to be online at the end of the scheduled auction to prevent somebody from coming in and sniping you at the end of it.
Right.
But one of the things that we do to prevent that, which is something that is a problem on sites like eBay, is if somebody makes a bid within the last minute of the scheduled auction, we will automatically extend the auction somewhere between 3 to 5 minutes, depending on where we are with that particular property.
I see.
To give the other bidders chance to come in and counterbid.
Right.
But it's a great experience if you're looking for the kind of properties that we have on the site right now. Right now, overwhelmingly, the residential properties are distressed inventory. They're either properties scheduled for foreclosure sale, or they're properties that the banks have repossessed and are trying to dispose of. We are making a transition on our commercial side of the business. Right now, about 50% of the assets that we sell are traditional non-distressed assets, whether it's retail facilities or hotels or office buildings or multifamily units. And part of the reason for that, Mike, as you know, is that the pool of distressed assets is shrinking.
Sure.
So as that market shrinks, we're going to be moving pretty rapidly into selling more traditional assets, both on the residential and on the commercial side. But right now, there's a lot of bargains available on the site for people that are interested in looking.
Fantastic. Yeah. So for those that are interested, check out auction.com. So Rick, thanks so much for your time joining us today. Appreciate you being here.
Well, we'll have to do it again before you get another 216 episodes.
Yeah, we don't have to wait 212 episodes. We'll have you back before then. So thanks so much, my friend. Great to see you.
You too.
Have a good day. Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry. So get on over to FlipNerd.com.